Good day. Ira Epstein, and here we are with your evening wrap-up of your financial markets for the beginning of a new week, October 2nd, 2023, the beginning of a new month, and the beginning of a new quarter. Let's applaud it in. Now, a miracle happened over the weekend, and that was Speaker McCarthy, magic hat, pulled the rabbit out, and got a deal done. Now, unfortunately, the messenger might get killed because the far-right Republicans are trying to put together enough votes to remove him from his leadership role. This was going to happen at some point, an attack on him. It didn't matter. He did a great job for all these months of trying to avoid it, but he acted in the benefit, in my opinion, of America. He kept the government open. Now, is there a perfect solution for this? There isn't. We have factions that don't want to give money to Ukraine, others that do. We have the border issue. I'm one of these guys that wants a lot of money for the border. This has got to come to an end. We need to not have this open border policy. Contrary to what the president says, it's an open border policy. Every American knows it. We see what's going on. And if you go down there, I have friends that are there. They just tell me what is going on. And they send me photos, so I see them on their phone. You know, we share it. Unbelievable what is taking place. And then the last thing is the hard right Republicans want to control spending. Now there, I think they've got a point. How they go about it is the difficult thing because they get no airplay and they get nobody voting with them because an election coming up, people don't want to say, hey, Mr. America, you got to tighten your belt. We're not going to give you blank, blank, blank. And nobody wants to do that in order to get a vote in their local areas. Do you disagree? You might, but you're living on a different planet. So that is what the far right faces, but they're still going to try to get their 15 minutes of fame and get this done if they can get the votes together. The big problem for all of us is let's assume that McCarthy gets in some manner voted out. Who's going to replace him? You know anybody? Because I don't see anybody that's number two there, but I'm sure there'll be a face. World goes on, okay? Will it be any worse or better? Don't know. I think McCarthy's done a pretty good job, but I think he sold his quote-unquote soul to the devil to get to be speaker, and it's going to haunt him his whole time that he's there until he can quell this or they quell him. It's going to be one of the two. So last night, when I was putting out my newsletter, I wrote that I thought we'd start off the day with a gain because people will wrongly be euphoric. And that's exactly what happened. And then the big break happened in the stock market. And on that break, I can tell you, I told my clients, and I may be sorry for this, to cover some shorts. In fact, cover shorts. And they did. And now we'll see if I'm going to be sorry or not. Do I want them to resell? Absolutely. Do I think a bounce can happen? Well, I wouldn't have said cover shorts if I didn't think a bounce can happen. And there's reasons. We'll review it here on the chart. Going and covering shorts is not the same as going long. I am not saying buy this market in any manner. I'm watching bonds and notes. They just keep adding yield. This is going to be a real problem. As the dollar keeps getting stronger, just take a look. You're at 106. That's not a misprint. 106.60, and you're knocking on the door of getting 105 in the euro. So the dollar's just reigning supreme. That's destroying the metal markets. This is a big part of the problem. And it may come in and destroy the stock market because there is a point at which the strong dollar affects U.S. corporations. Now, before we get too far, what is the month of September that just left us? It's typically a big down month in the stock market, the worst month of the year. It pretty well lived up to that billing. What is October? October is the most volatile. Did you hear what I just said? The most volatile trading month. It's got a history of stock market crashes. I was around for the 87 crash. There's been many crashes in it. And that's because it's a transition month. If you've had a big down out of September, you try to get your footing to see, can you get the Santa Claus rally going into the end of the year? But October's too soon for Santa. So October is a month where the market whips and tries to get its footing and often is trendless. Doesn't walk out of it in a big way, one way or the other. I expect that this year. As we're taking a look at the E-mini on the weekly chart, as long as you're under the 18-week average, I think you have a bearish bias. When you come to a daily bar chart, you can see how the market is suddenly, with all this, just come to a grinding halt. Now, when I put my swing lines on, I have a pattern of lower highs and lower lows. That is bearish. The market had a crossover right here where the 18-day average in red got under the green, the 100. Bearish. But this is what's bothering me. The first challenge of the 200-day average, and when you were down there today, I just decided, you know something? It happened back here and you held. It's happening here. And the combination of the Bollinger Band in there, could I have left 30, 50 points on the market? I certainly could have. Do I think it was worth doing it? I certainly did. Otherwise, I wouldn't have said do it. Are we embedded? Yes. Am I looking for my clients to resell a rally in the market? As long as this red number stays underneath 21, the answer is yes. How you do it? That's in the enhanced Bollinger Band course. Suffice to say, that's what I'm looking at. Then I looked at the NASDAQ and I said, you know, here's a real bearish event. And the index that carried the market, AI, all that, is this. It doesn't act like a market that wants to stay embedded. In fact, take a look at something as to one of the reasons why I put the parts of the puzzle together and said, maybe it's time to run. On Friday, you lost the bearish embedded reading. You had a settlement over 21. Unless today was a day where you got another one of those, which you did not, then the odds favor, before you go down for these lows, and just playing percentages, you're going to make a run for the 18-day average, not the green one, because it's the closest main moving average. Does it mean it has to happen? No. Does it mean I could be wrong? I could be very, very wrong in the marketplace, and this is where you're at right now. But that's what I'm looking for, so it was a reason that I was looking. When we come to the Dow, you hit the lower band and you held it today, and you're getting a bounce, you're embedded. Maybe it's time to rotate into the Dow shorts, I'm thinking that to myself, and not trade the S&P, certainly not the NASDAQ. It's the strongest looking of everything, and it's owed higher prices. And maybe it's time to have walked away from the Russell, which I was hoping would get down here, and it just didn't do it. Does it have to? No. Do I still like the short side on rallies? Oh, I do. So other than the NASDAQ, I think rallies in the other stock indices are still in the sell camp, and you bail if the red line closes over 21. I got a game plan. Doesn't mean that I'm going to tell you how I execute it, but I give you the game plan that I have. In the 10-year note, you're fully embedded. Rallies in this market, I think, are going to continue to be sold. The beauty of this bearishness is the market just keeps moving to the right-hand side of the Bollinger Band, doesn't get extreme, and just carries down. The bottom pickers are getting their heads handed to them. Remember all those people on CNBC? I can name them all, and I'm not going to. You've got to buy now the long-term notes or in the bonds. You got to buy the 10-year. I'm not going to do that for my clients, but I'm going into the twos. They're all underwater. They bought too soon, all right? Now, if they're buying a little here, a little there, and so on, they're not underwater. Then that's their game plan. But a number of them said, this is it. I'm telling my clients full in. I heard it. And boom, end of discussion. They're underwater at this point. They're not wrong. Their client's still getting a beautiful rate of return, near 5% for a 2-year period. Could they get a 6%? That's the problem, all right? When you take a look at the dollar index, you came down on Friday. This is so important. You lost the embedded reading. You had a settlement that was underneath 79. The only time it can re-embed without going through the whole process is today, if the number closes back over 81. My gosh, it did it. So this was a spot that knocked traders out. Now I contend they'll try to buy the market on pullbacks. They don't just buy. There's a way in my enhanced Bollinger Band course you do it. If you've taken the course, you know what I'm alerting you to. In the eurocurrency, on down, did you lose the embedded reading here by getting a settlement in this market that would be over 21? You did. And what did it do today? It reaffirmed its bearishness. So 1 day or couple of hour respite from Friday till Sunday night, and now the market's back to embedded. I think the pros will be selling this market on the rallies. In the British pound, you never did lose the reading. It is still bearish as can be. In Bitcoin, so what drove Bitcoin up? This morning I didn't realize it. I put out the morning update. It was early, and I didn't put two and two together. Today was the day where ETFs based on futures contract by Bitwise were released. I think overall there were 4 that came out from them, and might have even been another company or two that released them. Now, none of these are based on the spot market. And the reason is the SEC says there's no way to control the spot market, but because futures contracts are in theory controlled, are vetted, they can have ETFs on those, so you had another series of them come on. There is a huge difference between the SEC allowing on futures contracts an ETF and allowing it on the spot. You are at North and South Pole. I heard people today coming out and going, we're not that far away. Oh, yes, you are. Oh, yes, you are. You've got to get the SEC to cave in. Then you're not. They haven't. The question is, in this month, they have a certain amount of time to challenge some law cases that come up. We'll see. If they don't challenge them, maybe you are closer than I'm giving you credit for. I don't think they're going to do that. I think they're going to challenge because there's no way to control the cash market. It's out of their purview. They have complete control with the CFTC over futures contracts in America. That I get. So you went up there. If you don't understand that the first challenge of a major moving average with the Bollinger Band is where pros take money off the table, you haven't taken my courses. And that is exactly what happened, and you got thrown back pretty good. Brent versus WTI. I read a report today that was interesting on this, and they are saying that U.S. energy will lose exports if the price of Brent and WTI stays this similar. I don't know all the makings why. It was from very good people. Probably has to do with shipping costs, the strength of currencies. I don't know. Because typically, the word is typically, you price oil in U.S. dollars. Now, we all know that Iran's not taking U.S. dollars. We all know Russia doesn't want U.S. dollars for its oil now. We know the game, so don't write me about that. But just giving you what it is. When you look at the market, I contend you're caught in a sideways trade, not a breaking market, sideways trade. Notice how the Bollinger Bands have gone sideways here, void of a trend. That's where I think you're at. The same thing on a little larger scale in November WTI, and you're already oversold in the market. Heating oil got hit today in a big way, I think partially because the strength of the dollar. I think it'll be short-lived. I think that you're still going to get your winter demand coming in. We'll see if that's it. But the trend temporarily on the daily chart is down. The weekly has to prove itself by Friday. This is not a weekly chart. And in that gas, I just can't get my arms around any trend in this market that makes sense. I've said that for a very long time, and it still remains that way, just too difficult. So you put it all together, and you try to come up with game plans. And for those of you newer to the market, your plan should be get our futures trading kit. 14 patterns of charts. You print them out. You keep them on your desk. My pivot point course, Aruna indicators in here. The cause and effect sheet. I wrote this when Paul Volcker was Fed chair. M1, M2, M3. I did a big study on it to show what happens with money flow and interest rates at that time. And then access to all the CME Group courses. Right through a link that we have takes you right there. Charting software, both our standalone and web-based versions, our QT mobile, free access to our research, free limited access to our price count. It's all included right in here. So how do you get it? Go to iraepstein.com under free offers or move your cursor right up here. You'll see the icon, give it a click, and away you go. With that, I'm Ira Epstein. You have yourself a great day. I will talk to you all tomorrow, first thing in the morning. Trade well.